With the recent announcement of Fetch AI, SingularityNet, and Ocean Protocol merging into one cryptocurrency called ASI, it's kind of got the crypto community in a bit of an uproar, not knowing whether this is going to present a great opportunity for further upside, or is this going to boost the market cap so much so that it eventually massively dumps the new cryptocurrency. I've been invested in Fetch AI for quite some time now. So in this video, I'm going to be showing you how I'm planning to de-risk myself regardless of what ends up happening with these tokens. And I'm also going to show you how I plan to rotate my profits on these coins into other AI projects that may bring me a potentially much bigger return. So whilst we get into all of that, be sure to hit that like button and hit subscribe if you're not already subscribed. Now, let me tell you my actual thought process on this whole thing, because there's not a one size fits all when it comes to making the decision of what to do with your investments. And so I want to show you where I personally stand in this situation so that if you're in a position that is similar to me, it can hopefully help you to make a decision on what you should do with your investments. The number one thing, as I mentioned, is I've been invested in Fetch AI for quite some time. I've also taken majority of profits already. And I also have what I call a moon bag. Now, to explain what that is, it's when something that I've invested in early has done multiple hundreds or even 1,000% return. And I take out all of my profit and I leave what I initially invested in that token. So I've got my initial capital back, I've got extra profits, and the amount of profit that equals what I initially put in stays in the market. And if that happens to keep going, great, I continue to make money. If it turns around and goes to zero, it doesn't matter because I've cashed out most of my profit. Now with Fetch AI, because I believed in it so much and also because of where we are in the cycle, I believed I had invested really early and was 1,000% up more than that, and decided to keep a bigger moon bag. So I didn't actually cash out as much as what I normally would. And so I do have a decent amount of money still in Fetch. And when this news came out, I then had to make a decision what I was going to do with that. First of all, I'm not at risk. Like I said, I've taken my initial capital out, I've taken a lot of profit out, but I do have decent money still in there. That is profit turning into more profit. And that meant that the decision I had to make was, can that profit that is still sitting in the Fetch token be better used elsewhere? Or am I happy to risk it on whatever happens next? So some of the issues that I have with this announcement is that, first of all, ASI, which is going to be the new token once they've all merged, the roadmap kind of looks amateurish as they're leaving the product for the long term. When we have things like 𝗟𝗏 as a competitor, which is already a working product, ASI really should be making the product the priority. In addition to that, the point of merging doesn't really seem to make sense because each one of these tokens had good fundamentals on their own. So that kind of makes me wonder, like, if it's really as good as we believed it to be, what is the point of the merge? Now, having said that, ASI may become something amazing, may become something great and blow everything else out of the water, but it also may not. And unfortunately, because we don't know what's going to happen once this merge comes, it takes it from being a medium to low risk AI type of coins individually to putting it back into the degen bucket. And the degen bucket kind of needs to be assessed in a very, very different way. In a degen bucket, you wouldn't actually have as much capital as you would have in something else that you trust. So the decision for me really came down to, okay, well, it may work, but it also may not work. And how much am I willing to risk on that? Maybe. And so the conclusion that I drew from that is, because I'm so significantly in profit with Fetch, taken a lot of profit, and there's still a lot of profit in Fetch at the moment, I may as well cash out, bring it back to my moon bag. So I'm not going to completely sell out of Fetch. I'm going to just reduce my Fetch capital so that I do have that what if degen bag, bring it back to what I would allocate to any other degen token. And if it works, great, I'm going to continue to make money from it. But if not, I'm going to take those other profits that I've made from Fetch. And this is now going to allow me to actually build a complete AI portfolio. And that's what I'm going to get into in this video. So let me show you exactly how I start to do something like this. So I'm going to use CoinGecko, and I know the category that I'm interested in. So I'm just going to use the categories tab here to find AI tokens. And then when I click on that category, it's going to bring up every coin that kind of fits in that category. Now, what I'm about to show you is really what I do in the second stage of the bull market. So the first stage is building a nice, diverse overall portfolio that covers a lot of different categories, so that I have a bit of exposure in a lot of things, but not a huge amount of coins that I can't manage. We did that in January 2023, and so we are more than a year into that portfolio. When certain coins in that portfolio take off, for example, Fetch AI, Solana has done it as well. There's a fair few coins in that portfolio that have done over 1,000% already. That means that I can now take profit on those, keep the moon bag, and then use that profit to now build smaller portfolios in particular categories only, because by now in the cycle, I know what narratives everyone's interested in because we've seen it. Whereas back in the bear market, January 2023, nobody was really interested in crypto. So it was hard to know what is going to be the thing that drives the next bull market. We all had an idea, but we didn't really have anything to back that idea back then. So now we know, okay, we had suspicions about it being AI, gaming, real world assets, things like that. Like we had these ideas, but now we can see that the proof is kind of in the pudding. It's sort of starting to happen. So now you can take profit from the things that you invested in really, really early, and you can build a smaller portfolio within one category that now is doing well, but you still think has a lot of upside potential. So this is how we're going to de-risk from the new ASI token. We're going to have some skin in the game, but we're also going to now reallocate those funds to build a portfolio that is going to be a well-diversified portfolio within the AI category. What we really want to do initially to start our research is we want to be having a look at the tokens according to their market cap. This is just going to help us to initially categorize whether the coin is high market cap, medium, or low. We're going to then filter it out further from there, but this is how we get started. And so from there, you just make your way through each token that is on the list. And there is a lot. So you can either just pick names that you know of and have heard of, or you can literally take the time to research every single one and go through them all. But let me use Render as an example. So you'll click on one and we're going to start to make a list. And in that list, what you need to understand is the max supply, the circulating supply, and the current market cap. So those are the three things that you want to list down. In addition to that, you can also go to the max on the chart and just have a general look. You would chart this properly later on, but for now, you just want to have a general look at how it's trending. If it's done something massive like this and it hasn't had a decent pullback, it might be something worth charting for a decent pullback depending on what is in here. Or you might say, look, I don't like these numbers. In addition to this, I feel like I may be too late on this one, so I'm not going to add it to the list. Another thing you might like to do whilst you are making your list of coins is click on this markets tab here, and that's going to bring you down here to show you all of the exchanges that you can buy that token on. Now, believe me, when it gets time to buying the tokens, it's really annoying to have to come back here and then figure out which exchange it's on. So when you're making your file, just make your file and add the exchange that it's listed on to your file so that you can easily buy from there. Now, what we're trying to do here is we're trying to find a nice mix of high, medium, and low market cap coins so that we can create that diversified portfolio. And then in general, you just want to have a look at the category as a whole to decide where you're going to initially put each one. And the way that I've personally decided to do the AI tokens is anything that is in the 1 billion and above is going to go in my high market cap. Now, that is not high market cap in relation to crypto because these still have a lot of room to move. When you have a look at the highest market cap AI coin is 3.8 billion, there's a lot of room in these tokens, but this is the highest of the AI tokens. So anything that is 1 billion and above, I would categorize in my high market cap list. And then anything that is in the 100 millions, I would put in medium. And then anything beyond that, I would put in low. And if there was really, really low, like if you really wanted to go bottom of the barrel because you're looking for a huge opportunity, single digit millions, you could put in degen. So I do also usually have a degen category. Now that's helped you to filter by market cap, but that's not all that's important. Let's use this one here because this is actually one that did make my list. We've categorized by market cap. Now you want to take the max supply and the circulating supply, and you want to work out what percentage of this coin is already in circulation. That's going to help you to further categorize whether or not this token is high risk, medium, low, or it should be in degen. So once you've gone through all of that, you then end up with something that kind of looks like this. This is what I have broken down as my personal list that I'm sorting through. And just to be very, very clear, let me go through this list and tell you exactly what I've actually already purchased and what I've not yet purchased, just so that you know that I'm not being paid by anyone to talk about these coins. I'm literally just showing you a process. So these first three are the ones that are going to be merged. You can see here that I've put them in the degen bucket now. Now, they wouldn't have been before the merge, but I've explained to you why they have to go into degen now. And these are the ones that I'm replacing, right? So they're not actually part of anything that I will be buying any more of. Ocean, I had and sold off because I wasn't enough in profit to take the risk. SingularityNet, I never got into at a good price. I missed out on it, so I don't have to worry about that one. But Fetch, I did get into, and I think at last I checked, I was up 1,400%. So I have a lot of room. And like I said, I've taken some profit. I'm going to be taking more profit. And that profit that I get from that is what I'm then going to be putting into these. I should say, I'm not actually buying all of these. This is how I've broken down my list, and now I'm going to make the decision on this video right now. So first of all, 𝗬𝗏, I don't feel exposed enough to. So I am in it. I want more of it. In this category, it's a high market cap, so that puts it into my low risk of the AI tokens. There's still a lot of coins to come into circulation, but the market cap is 3.2 billion. So my overall risk level on this is going to be low, but just again, know that that's in relation to AI tokens. If this was talking about all cryptocurrency categories, it would not rate low risk. So of this very small diluted category, I place it in low risk. The next one is Render, and Render, I also already am exposed in Render, and I'm happy to just keep what I have. I may buy more if there's a really significant dip, but if that never happens, I'm okay. So these two would go into my low risk bucket of my overall AI new portfolio. Now, the next one I'm going to talk about is PAL and OXO. These two are both go in the medium market cap category. PAL has 79% circulating supply. OXO has 86 circulating supply. Market cap is in the millions, so that's why they go in the medium market cap category. However, because most of the supply is out there already, that's going to put that at medium risk for me. Now I'm moving into high risk. So 𝗏𝗏 is one that I found on the list, and 𝗏𝗏 is actually Commune AI. This chart actually looks really good, which I'll show you in a second. But this one I see opportunity in because of the low market cap here at 102 million. However, the circulating supply is super low as well. So this is really quite a high risk one that could pay off massively, but it also could go to nothing. And the only reason I would put something like this in my AI portfolio is because I have the protection of these ones that are a little bit safer. So if I didn't have 𝗬𝗏 and Render in my AI portfolio, I wouldn't be able to take a risk on this. Why is that? Because if it goes to zero and it's only one coin in my overall AI portfolio, it is likely that one of the other things in my portfolio will take off and it will make up for the losses on this one. So if I had no AI at all, would I buy Commune? Probably not. It wouldn't be my choice of token if it was the only AI token I was going to get. However, I'm able to take the risk on this one because of the other ones acting as sort of like my safety net within a whole portfolio. So that is going to be one that I am looking to add. I did make a purchase of this one, I think it was yesterday or the day before, but I'm going to show you how I'm going to buy into these things over time anyway. Now, the next one that also fits in the high risk category is going to be Solidius. Now, it's a medium market cap, but it goes in the high risk category because the circulating supply is only 25%. Currently, it's 147 million market cap. So it's going to be one of my choices for my high risk portion of my overall AI portfolio. And the next two that are in high risk is Dynex as well as Conducts. Now, both of these are low market cap, so potentially the bigger return, but also bigger the risk. Dynex is 80% circulating supply and Conduct is 50% circulating supply. You can see that their market cap is in the tens of millions. And then the last one for me to consider is Link AI. Now, this one is low market cap, 13% circulating supply, 31 million market cap. Being the low market cap, the low circulating supply, that means that this one has to go in the degen bucket. But again, same deal with this one. If I didn't have these other ones that are a bit less risky, I wouldn't be able to take the risk on Link. So again, I would not only buy that if it was my only AI token, but as part of an overall portfolio, if it goes to zero, it's okay. I feel personally I would get saved by something else in this portfolio that would make up for it. So besides that, why would I add this one when it's low market cap and low circulating supply? I've put it in the degen bucket. So the reason that I'm interested in Link AI is because it's acting as an automated workflow for SMEs, which essentially means that it's saving them time. They also share a percentage of the revenue with Link holders, and they have a lot of good partnerships already. It's also a working product, so you can actually try it on a 7-day trial. So it's a working product. It's a time saver for SMEs. That makes sense to me because I am an SME. It helps to generate quality content. It posts automatically and it's improving every month. That's what makes it something worth me taking a chance on, even though it's low market cap and it's in my degen bucket. So now that you've seen that breakdown, what I need to do next is decide which tokens I'm actually going to add to my final AI portfolio. I would prefer to have more capital in less things if I had a smaller budget than to be spread too thin where, let's just say I could only put $100 or $50 into one token. That's not ever going to turn into life-changing money. So it really depends on what the budget is and, what kind of capital I'm dealing with when I create this portfolio. So if we're talking, fairly significant amount of money that you've taken as profit from something else, or you just have capital that you have not yet put into crypto, then the bigger that capital is, the more you can spread it out into different things, which again is just a way of diversifying risk. But the smaller your capital, the more picky you have to be with what you buy. So for me personally, when I'm looking at this, I'm happy with this low risk. If there's only 2 in low risk, I'm happy with that. I'm also happy with medium. If there's only 2 in medium, great. So these 4 would immediately form part of my portfolio. Now, I want something that is quite neutral. So I'm not looking for a super high risk portfolio, but I'm also not looking for a super low risk portfolio. Like, I'm happy to deploy money now. At this stage in the cycle, I'm happy to deploy and I'm happy to take probably bigger risk than what I was willing to take a year ago, because a year ago I felt the bottom was in, but I didn't have evidence that the bottom was in. Now we're on a time limit. At the end of the day, the bull market could be over in a year. It could be over in 18 months. I got to start spending more money, So I am happy to be medium to a little bit higher risk on this, but I'm not going full degen high risk. So that means if I've got my 2 tokens in low and I've got 2 in medium, I'm probably willing to go 3 or 4 in the high risk bucket. And one I really want to go for is Commune AI. I want to take a risk on that because of the chart. If we come out to the max chart, if you just have a look at this right here, you can see that it peaked at about $4 and it's been in a downtrend ever since. So as long as it's starting to bottom out here, it's now $1.50. It could be a really good buying opportunity. And the problem with most AI tokens is they haven't been in a downtrend, So like we're buying pullbacks at something that is like kind of already mooned, whereas this presents like a fairly decent opportunity as it's been in a downtrend since February. Maybe something happened to this, I don't know, but is there a chance this might be turning around soon and, could end up rebounding and giving us some really good profits? So I'm definitely taking a chance on this one. It's a high risk. It's in the high risk bucket. It may keep going down. It may go to zero. Am I buying at $1.50? Like I said, I've purchased a little bit, but my plan for all of these tokens that I'm talking about is to buy slowly over the next 2 months of the halving period. So we're in halving month now. At some point, there may be a dramatic pullback. There may not. I'm either buying into strength slowly over 2 to 3 months, or I'm buying pullbacks again over the same 2 to 3 months. To me, it doesn't matter so much. This is a spot portfolio. I'm just averaging in over time to eventually get the best price that I can get at this point in the market. And then I'm not really going to worry about these until we start to reach that really super hype phase of the cycle where everybody's just going crazy and they think it's never going to end. That's when I will start selling. So that goal is probably about a year to a year and a half from now, start slowly selling out just as I slowly bought in. So commune is going to go in my high risk. I'm definitely going to take that one. 𝗏 and render, as I said, I already have. PAL and OXO, strangely enough, I actually don't have it at all. So I will be buying those. And Link is another one I definitely know that I want to buy. Actually, the next one I definitely know I want to buy is Dynex as well. So at this stage, that puts me with Fetch AI being my only moon bag, 𝗏 and render in my low risk, PAL and OXO in my medium, commune in my high risk, as well as Dynex in my high risk, and Link in my degen. And I'm pretty happy with that. That's 2 tokens in each category with only 1 in degen. That really suits my risk appetite, to be honest with you, which means I'm going to leave Solidius and I'm going to leave Conduct. So that's what I'm personally doing with my Fetch AI profits. I want to be a little bit exposed, as I said, but not fully exposed. And I think I can better use that money elsewhere. And I hope that this video showed you how I go through the process of investing early, then taking those profits when we're still in the right phase of the cycle and rotating them into something a little bit more risky when the time is right to do that, where I'm still not really at any risk because I'm using profits from something to reinvest into something else to potentially make me even more profits in the long run, rather than just holding on fully to the original thing. And so all of the coins mentioned in this video are my personal choices. They're not a recommendation for you to buy, but I just wanted to show you how I go through the process. And now once I've made my list, it's just a matter of then charting those coins to decide when I feel like the right time is to buy. And then my process for actually charting these things to know when to buy, it's actually a very, very simple process. So let's take a look at the 𝗏 chart, and everything is based for me on the 4-hour time frame. Initially, before I start buying into things, I want to use the daily time frame to see if I can see a macro trend changing. So that's number one. Once I've identified that, I'm looking for my future entries to scale in over time on the 4-hour time frame. Now, once we're in that stage where we have changed the trend, retests of the 4-hour 200 EMA, if they hold, are what I consider to be good buying opportunities in conjunction with the RSI hitting oversold on the 4-hour time frame, as well as a vector candle being recovered. So if we use 𝗏 from back here, which was in December, just as an example, you can see here that we bounced off the 200 here, but the RSI was not in oversold, and we didn't actually change the structure after that bounce. We broke down. So this yellow line here is my 4-hour 200 EMA. Should we fail that, I then look to the 800 EMA, because the 800 EMA is the 200 on the daily time frame. So a 200 EMA on any time frame is always a really good area to look for a bounce, because algorithms trade off the 200 EMA. So if we don't get it on one time frame, switch up to the next higher time frame and see if it comes there. Now we can see here that when it bounced off what would be the daily 200 EMA, we did hit the 4-hour oversold. So this would have been a good buying opportunity back here. This would be where I would initiate a DCA entry buy. I never go all in on one altcoin at one price when it comes to building a portfolio. I buy in slowly over time, and I also wait for the structure to change. So whilst we got that bounce there and we hit RSI, I wouldn't buy immediately on that. I wait for the structure to change. So this here created the higher low. That right there was a bit of a W formation that bounced off the EMAs. So this would have been a good buy for me after I got the notification on the oversold RSI. And then I wouldn't really come back to buy back into this again until my RSI alert went off again. So you can see that there's a fair period of time in between buying for my portfolio. That one would have been in January, and the next time we came back to the RSI was in March. So when it comes to building a portfolio, you really are buying slowly over time. We're not trying to rush all in at one price. Now, when it hits that RSI again in the oversold region, again, I'm not just blindly buying because it's hit the RSI. I want to have a look at the pullback and see, does it present a really good opportunity? So that would have been this pullback right here. Now knowing that I've got my initial entry at a very good price, I don't want small pullbacks to kind of bring my average entry up too high where I'm at risk again, you know? So I have to watch that as well. This is a 25% pullback. It's okay, but for altcoins, you know, we want something a little bit deeper than that. So in this case, I would not have bought there. Now we've hit the RSI again, and now we're looking a little bit more decent. That's a 36% pullback, and price is coming back again close to the daily 200 EMA. So this is looking a little bit better. This is a much more decent pullback. So here's what I would do then is if I wanted to do a few more average entries, I would buy initially on the change of trend. And then if it came back to create a higher low, I would do a second buy there. And so now I've got my first buy back from January. I've got a couple of buys here. And then if it broke the structure and moved out, I may do a third buy into strength. And so that third buy would end up looking like a break of the 200 EMA, a retest that held it, and the third buy might go something like that, imagining that this 200 EMA did something like that. And then again, that would be it. I would leave that until, again, we came back to a big, decent sell-off, something in the 30% when it comes to altcoins, hitting RSI oversold on a 4-hour time frame, hitting the 200 or the 800 EMA. As long as all of those things lined up, then I would buy in a little bit more. Now, it doesn't matter to me if this drops down further and I've bought here. Why? Because the average entry is going to be somewhere between my initial buy, which was back here on this W. These will be my other buys. My average entry might end up being somewhere around here, around the $300 mark. So I wouldn't worry too much if we came down even further. It's just another buying opportunity. And overall, we would still be in profit. Not to mention, I'm just trying to get my entries in this zone because I plan to hold this for a year anyway, or for whenever I feel like the bull market is looking like it's going to peak out. So first thing you want to do is decide your capital. Next thing you want to do is then decide how you want to split up that capital between low, medium, high risk and degen if you want to include that in your portfolio. Then categorize things, start with the market cap first, then go to the circulating supply, decide which category it belongs to, then how risky you want to be in your personal portfolio and put them into those buckets. And then it becomes very simple. You know how much capital you've got. You know how much of that capital you want to put into each category. You know what coins belong in each category. And then you saw how I did it. Process of elimination. How many do you want to have in each? How much capital do you want to spend on each? If you have large capital, you can have more coins if you can manage them. If you have smaller capital, you want to be a bit pickier so that you have a well-diversified portfolio, but you can also maximize the gains per coins. And then you just buy slowly over a few months, buy the dips, buy into strength if there is no dips, meaning that if there are higher highs and higher lows, you're buying on higher lows. Just know that it's not about trying to get the cheapest price right now because you may miss out altogether. If you're waiting for a huge 50% pullback, no guarantee that's going to come. So you're better off being in the game than not at all, knowing where we are in the cycle and that at some point in time, all those little purchases that you've made throughout this stage, the halving stage of the cycle, is going to turn into profit when the cycle is coming closer to its end. Did I know in January 2024 that the things that I was buying weren't going to go down lower? No, I didn't. But I knew how to allocate my capital little bit by little bit because I felt like it was the right time in the cycle to be buying for that portfolio. Turned out it was, lucky me. And now I'm in the stage where I can go a little bit more degen if I want to maximize my gains because the time in the cycle is running out. So I don't like to be too degen on this channel, but I know that you guys love it. So hopefully I've taught you in this video how to build a safe portfolio but still allow you to have some exposure to higher risk things so that you can get the maximum gain possible, but you don't end up being someone who everything just rugs on you and you end up making nothing out of the bull market and you end up feeling ripped off.